Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
You can get it, Scott.
It's Monday. I don't even know who I am. It's been such a long weekend.
I'm Alex Steele for The Street. Together we're going to bring you the morning coffee Monday, everybody. All right, Scott, let's get to the markets here. Strong open on Friday. Good morning. Then sold off midday. Is this a and we're up today. Is this a bearish signal going forward?
I think we have a few bearish signals going forward. If you recall last week, the mantra last Monday was sell the excitement over Osama bin Laden getting shot. Okay, we were at new highs. It was a prudent thing to do. And sometimes when you do the prudent thing, it actually helps you. And as long as you do that, you'll never be in harm's way, like chasing excitement, buying groups after big runs. So if you sold a little bit Monday, that was one scenario. And then Tuesday we talked about leading stocks that were breaking through upper levels. And they all broke through those upper levels. So the momentum stocks got hurt. Another sign that this could be more than just a pause or a sell the excitement, but really lighten up because we're seeing some technical damage.
So what do you do then as a strategic officer? Do you want to like short some stocks and also pick opportunities to go long in other stocks that you do like? Can I do a two-pronged strategy?
Well, right here the market has a lot to prove. Okay, we talked about the momentum trade is lost, but a lot of those key stocks broke, they held their 50 days, which sometimes is the usual case in point where they hold their 50 days. But now what we do is we judge the bounce. We see what kind of bounce we have off these levels, because if there's no real bounce, and then we see some of these key stocks we're going to talk about slice those moving averages, we know the indices will follow. So let's take a quick look at the S&P and show you what we're talking about on the chart. So this was, it feels like it was a decade ago. This was when we killed them. This is when the excitement happened after a big move off of that right shoulder. If we take a closer look here, we were extended. And then we had 4 big down days. Then the jobs report, we had a nice bounce. And like you said, Alex, we would have thought we would have held it a little bit better. But we closed on our lows. So today with the futures opening up a little bit, we need to see if we could build a little bit on Friday's support, because now we have a new point of reference. So what I'm going to be watching is 1330 on the S&P, which is support. Near term now resistance is around 1350. We might hover in this area, and then we have to see whether or not we roll over or we could build on this dip that just happened.
And real quick, with like 20 seconds, what about the Russell? What is the Russell telling us? Is that also a bearish indicator right now?
Well, the Russell broke out first. The Russell was a leading indicator because it's the growth. You want to see that happen during healthy moves. The Russell has already tested the 50-day. So if you take a quick look at the Russell here, it already came down to the 50-day moving average. And if it were to come up, that would be great. But if it doesn't, I could talk about it regardless.
All right, keep going.
So anyway, it's at the 50-day moving average. The S&P's 50-day moving average is down at 1320. So to wrap it up, if the Russell now can't really bounce off and starts breaking it, it could be a